Chart of the Week with Redmayne Bentley.
You're listening to financialradio.co.uk. My name's Giles McMullen, chatting to Bill Rook from Redmayne Bentley. Bill, what are we looking at this week? The FTSE 100 and a few other resource stocks, because they seem
on the theme of what we did with UK coal and making 60% in about a couple of weeks on that one, I was going to say, well, let's stretch it and let's have a look at a few others which are coming up in the oversold band, and we'll look at those after we had a look at the FTSE.
Okay, let's do that, because I know that the UK coal trade has been a successful one, a very successful one, as you say.
And there's a handful of other ones that were very good as well at the time.
Precisely, and you've been looking at applying that to other ones. So we'll come to that in a minute. But first of all, the FTSE 100, it's been quite a volatile few days, hasn't it? But good for those with calls.
Yeah, it is good actually. What I've done here, I've got at the top of the chart. I've got an MACD weekly, which gives you the sort of the trend of where the market is going on a longer term basis. And really, you can see this year was written off right from the start, I suppose, if you're looking at this with hindsight. And also, as it stands at the moment, we could be at a very, very deeply oversold state. And this is what we're seeing, I think, rallying from an oversold position. We've just crossed the simple 50-day simple moving average, which is, in fact, lots of indices are going this way. We'll look at some more in the coming weeks. But this one here has just crossed it now, and that's the green line. It's still way off from the red line, which is the 200-day moving average. And what I've done there is put a hoop of where I think the target is, of where it's going to be in the 46 to 5,000 level. That's what I'm looking for in the market. Short term, I think this market's got legs in it. I think we could see when I have a bull run here on the market. I think market is deeply oversold and expect a rally from here, a very strong rally.
Really?
Mm-hmm.
I see.
Yes, okay. I'm in that camp, yeah.
And when these rallies come, they come pretty fast. I mean, how long do you think it could take to hit those levels?
Well, I think very quickly, because I think in January it'll be tested again. I think in January we'll see what the profits are like and see what happens next. This is the run-up at the end of the year, and I think we're just catching up from a very, very savagely oversold situation. What I like about the market is what I do is I go to the finviz.com site and look at the heat map there on the sectors each night, and to see, well, where are these rallies coming from? Yeah, the volume, it tells you volume levels there as well. It's probably one of the best sites I've come across for financial information on American shares. And this gives you volume levels. So volume levels aren't high, but what I said earlier was I liked was the breadth of the market is much better breadth across the financial resource sectors. These are good. We need what we need from this market as a rally in financials, and that's what actually kick-started the American market on Friday. And that sparked great movement and great strength from the American market, which is spread worldwide. It's really looking good. And what we must do is separate what we actually see in the market from what's actually going on in the real world as well. This is the hard bit. But actually, I think the market's discounting a lot of this, the bad news in the market outside the real world, and looking for an end of recession, possibly end of August, around that time. And that's when the market will that's when the economy will start, world economy start picking up from there. Any sooner when the market will be higher, any more prolonged misery, then the market will suffer.
All right. Okay. Well, let's look at the next one that you have on your list, which is Lonmin.
Lonmin, yeah, Lonmin's a failed bid, and this is a casualty of that bid that didn't go through. So, hence the knee-jerk reaction on the chart we can see in August, and this is trickled all the way down. It's colossal fall, really. But what I've done is put the horizontal lines on the window above the chart, and that's the relative strength chart, and seeing where it goes below 40, that's 40% below the relative strength of the 350. So when it goes into that category, then what I do is then look at the top of the chart and see if there's a blue tick up there, and there's a blue tick up there. And now from last night, this is indicative that this is oversold and rallying from a low base. So I'm very encouraged that this will actually pick up. Now I don't want we've got an underlying short-term trading price on that, but I can probably with that in mind, I'll give you a quick price on what it is now.
Right.
But it is Lonmin today is roughly up 6%. Okay, 6% already. So that's kick-starting. the short-term target on that will be when the relative strength of 2, which is the second window from the top, crosses 90 and closes down from the 90 level, which would be indicative on the window above that by a red tick down, if you see what I mean. So the last time it did that was in November, and you can see when it crossed the 90 and popped back, a red arrow comes down on the bar on the window above.
I mean,
right?
Yep.
So you're going to say something?
I was just going to say, we've been talking recently, sort of over the last few months, about how the buy and hold strategy, has not been a good strategy this year. And no share shows it more than this, does it? If you'd been a buy hold of Lonmin at 35 quid, you'd be reeling now, wouldn't you?
Absolutely terrible. Yeah, that's right. Absolutely right. And this has always coincided with the collapse of platinum. We looked at platinum's chart the other week and suggested that platinum might be bottoming. So this also might help support the case for Lonmin. So I think platinum prices are turning around. I'm also a fan of some of the precious metals when they start. Well, they're sort of certainly that one. I'd like to think the other thing is to see gold and other precious metals start ticking up. Then we know we've come out of a deflationary spiral as well. So moving towards an inflationary one. So I think this is what the world's facing. Or what's actually brewing up to is more inflation, which is very good for equity, is very bad news for bonds.
Yeah.
So the bond market surge we've seen recently, and we'll look at next week perhaps, is going to wilt as the inflationary pressures build and equity looks cheaper. Equities can survive inflationary bouts much better than bonds can.
Yeah, of course they can.
Yep.
And finally, Xstrata. Go on, Bill. Talk us through the chart.
Yeah, sorry. This is very similar to the other ones. They're all in this sort of category of where is the buy signal. The buy signals that are coming beforehand, without there being an oversold situation, is pretty choppy. If you see from the top there, the top of the chart there would tell you when the buy signal is coming, when the blue and the red. And it's pretty sort of inconsistent, I think, one to just move up and down with the relative strength. But what I do like and emphasise is these shares that are really below between 40 and say 50% underperformance against the 350. Anything more than that, then I wouldn't be interested because it's gone too far, and it's not interesting enough for worthy of trading. Certainly, this is worthy of trading, and I think this one in particular, I don't think it has any gearing problems. I think there's much debt behind the company. I think it's just a casualty of the resource collapse, price collapse. And
I mean, if you think back to the beginning of the year, they were all doing pretty well, weren't they?
And they were darlings of the market.
They were holding the FTSE up and or supporting it, rather.
Absolutely, they were.
And anyone that had was overweight in the miners was doing very, very well indeed.
Yeah, that's right. That's very well. That's very true, Giles. It might well be as time goes around, but this one is up. This one's up a couple of pennies, but there's not much up to there at all. So this one's still a runner, or could be bought. There is some resistance, and the resistance is coming through from where there's a line I've drawn on matching up the tops here. So it might get to about £8 and find resistance, and that's almost where the moving average on here. I think there's a 20-day moving average up on here. So 20 and a 40 on here, the red and the green, respectively. So there might be active resistance points to where you might think the target's going to be. The stop loss, you put a very tight stop loss in case the trend continues down. But I think these are worthy of consideration for bolting onto portfolios and for traders alike. Yeah, but I'm a fan of the market at the moment. I think we're going to hit 46 quite promptly. So I'm rather bullish short term.
Very punchy view, Bill. I like the sound of that. Well,
okay.
we will chat next week and see what happens this week. So much happens in a week now, doesn't it?
In a day, Giles.
Well, precisely.
Yeah, right.
So much to cover. Bill, thanks very much for chatting to us today, and we'll talk next week. Bye bye.
Pleasure.
Chart of the Week with Redmayne Bentley.